Good morning, good afternoon, and good evening. Thank you for joining us at the Qatar Economic Forum panel's discussion on the Bitcoin blues, the realities of global adoption of cryptocurrencies. I'm Eddie van der Walt from Bloomberg News Markets Live team and a long-term enthusiast for cryptocurrencies, though I have to admit I've been proven wrong several times by just how big this space has become. Joining us today, Henry Arslanian from PwC's crypto lead and adjunct professor at the University of Hong Kong, Nick Carey, the co-founder and president of blockchain.com, Stephanie Holzer-Yen, chief currency strategist at DWS, Akshay Chopra from Visa, Navi Gupta from Ripple, and Adam Reynolds from Saxo Markets. With so much talent, this is promising to be a lively discussion. I promise to stay out of the way as much as possible and get our guests to speak their minds. And with that in mind, I come to you first, Nick. Nick, tell me, what is the blockchain killer app?
Thank you for inviting me today into Bloomberg and to Qatar for being generous hosts as usual. So my name is Nicholas Carey. I'm the co-founder of blockchain.com. We're the world's most widely adopted digital currency wallet. We help people all over the place send, receive, secure, trade, and exchange digital forms of wealth. I'm also the author of The Future is Decentralized and chairman of skyslimit.org. So for about 10 years, people have been asking this question, and it's a really important one. What is the killer app for this technology? And I still think it's pretty simple. The killer app is just a better form of money. Money is the oldest social construct we have, and it's older than written word. And it's broadly best to understand it as a collection of systems that allow us to exchange and trade wealth. So the last 18 months have clearly been one of the most complicated, challenging, and disruptive eras that we have in memory. And in a lot of ways, the pandemic has just accelerated trends. We've accelerated trends to digital, and it's pretty clear that the internet will be the largest contributor globally to GDP by 2030. So as the largest coordination system for human activity, it makes sense that the internet also have a digitally native financial system to coordinate the exchange of wealth. And cryptocurrencies and digital currency fabrics have broadly been trying to achieve that goal by wrapping the planet in an economic capability to send, receive, secure, trade, and exchange wealth. So the killer app is a better form of money that makes everybody start from the same playing field, regardless of the circumstances of their birth. And we're getting there. We have a lot of work to do still, but in 10 years, the progress has been astonishing. So there's now more opportunities, more job opportunities, more investment opportunities, and then than ever before in this industry. And it's very timely to be discussing it with my fellow panelists today. So thank you for your time, and I'm excited to contribute to this discussion.
Wow, that's some thought-provoking stuff. Naveen, I want to come to you next. I'm curious about this idea of cryptocurrencies as money or cryptocurrencies as a disruptor of traditional finance. Where do you see that cryptocurrencies fit in today and down the line, 5 years from now and 10 years from now? Are we really talking about DeFi? Are we talking about NFTs, or are we talking about full adoption as a currency, as money?
So I think the easiest way to think about digital asset would be, you can think about it as containerization, right? So a container helps move goods from point A to point B. You can think of internet protocols as containers that moved information from point A to point B, and cryptocurrencies exactly do the same thing for value. And like we have the internet, which carries the information, but underlying, there needs to be a container for value. And that's what digital assets are. So to respond to your earlier question, to my mind, payments is the killer app, right? And if I'm very specific, it would be cross-border payments, because the friction is extremely high for people when they move money, goods or services cross-border. And then second would be micropayments. Today, micropayments aren't possible because above a certain point, the traditional system is not able to carry value from point A to point B. It costs a minimum amount, whatever that would be. But if financial inclusion needs to happen, we need to lower the cost by 100 of the current cost structure. So so to my mind, of course, it will disrupt in some way, but also it will be complementary to the current system. So the current system would still be the KYC, would be the AML, would be the last mile connectivity in some way. And then the containerization would mean that value will move exactly the way it works in ports. So there will be a domestic system which will take things to the port, and after that, there will be big ships that will carry from one place to another. and digital assets or cryptocurrencies will be one of them.
Right, Stephanie, I think that was some really interesting points that was made just there, the containerization of value and of payments. But I think this is traditionally been the domain of the of the sovereign and of the central bank. And the central bankers, I struggle to remember a single time in history when a sovereign has said, I'm going to let somebody else print money, the dominant form of money in my jurisdiction. Are the central banks going to give up without a fight here?
They won't give up without a fight, Eddie. Absolutely not. And I can see, we can all see in daily commentary, as almost a concerted effort now that they are getting closer to launching central bank digital currencies, that they want to make sure they give a heads up and a warning that regulation is there to come and that they won't just stand by and watch. It's actually quite puzzling that this has been happening for quite some time already, but I guess there had been some catch up to do.
And what exactly is a central bank digital currency?
Well, the central bank digital currency is the centralized version of a cryptocurrency.
Right.
So it is as much a digital currency as the decentralized ones, but it will have the central bank backing it with its balance sheet.
Right.
And it will obviously, because we had a question before discussed amongst ourselves, I would like to address right away. It will have all the benefits that some of the wholesale market is looking for in the decentralized cryptocurrency space, such as very cheap cross-border transaction cost and things like that. It will be something that wholesale adoption will be much easier when central banks are launching CBDCs.
Akshay, this sounds to me like something that potentially is interesting for your space, because if we see that sort of adoption here, and we see central banks, allowing payments between individuals via a currency, is that a threat or is that an opportunity for you at Visa?
I think it's absolutely an opportunity, and there's two ways we look at it, right? So firstly, we're still not at the place where you can go into a coffee shop and buy a coffee with a Bitcoin or Ethereum or even a stable coin at this point, and definitely not in most cases a central bank digital currency. And we want to firstly change that. So with 50 of the largest crypto exchanges and wallets, Visa has a relationship where they actually issue Visa credentials, a card, a digital credential, which allows that transaction to happen. So if I hold Ethereum on Coinbase, for example, I don't need to hold any fiat dollars in my account. I have a Visa card with which I can go into a coffee shop, pay for it, and the coffee shop gets paid for it in a fiat currency. I get paid deducted in Ethereum and so on. And if they want to actually, the exchange wants to even settle with us in stablecoin, keep completely off of fiat, we've been able to enable that as well. So if we recently announced the world's first live settlement transaction with a payment network happening with crypto.com. So that's one aspect, right? The payments and making sure that this adoption happens, and immediately all those people are able to use their crypto assets at 60 million Visa merchants globally. The second aspect of it is, there's the new currencies and new systems actually coming into the fold, like stablecoin, like the central bank digital currency soon. So we're actually upgrading our infrastructure through the pilot that I mentioned and through many other collaborations. We're releasing a number of crypto APIs as well that actually have the entire financial industry be able to authorize, clear, settle, transact in stablecoin and cryptocurrencies as well.
Okay. And then I want to come across to you, Adam. I mean, tell me how is Saxo and its clients benefiting from all of this, and what is it that the industry still needs to address in order to stabilize cryptocurrencies and just get to that next stage of mass adoption?
Yeah, it's a good question, but I'd love to answer your earlier question first and come back.
Go, please.
Because actually, I don't think that the payments is necessarily the killer app. I think payments are usually part of a contract that is going in two directions. And I think the smart contract is the killer app. And I think that's where the future is for the cryptocurrency world. So you've got value changing hands with the cryptocurrency, but you've also got a contract that is embedded in there, which may be a contract for trade finance, it may be a contract for a security, or it may be a contract for an NFT. So I think the broader view of it is payment for something, and the smart contract is really the killer app for the crypto going forward. And that's why I don't actually think that central bank digital currencies are going to be much of a threat for that, because I don't see people building their smart contract business cases on top of a European central bank controlled centralized currency. I think people would prefer to build it on top of something like an Ethereum or a Cardano, or something which is being developed separately from the government. From the point of view of Saxo introducing more trading of crypto onto our platforms, a natural thing. We've got a huge number of ETNs that our clients have already invested in. Europe's got lots of different exchange traded notes that link to cryptocurrencies. We've got 40 or more of them on the platform already, and we've got huge amounts of money flowing into them all the time. So we thought that putting on something that traded sort of 24 hours a day was a good way to do it. So it trades like a foreign exchange currency, and we'll be looking to expand that. And that's created a huge amount of interest from our existing clients, but also new clients coming to us, because there's a much higher degree of trust, I guess, with an organisation like Saxo than with many of the other exchanges that are entirely unregulated.
I want to come to you in a minute, Henry. I want to bring this idea of DeFi versus money, but I just want to bring Stephanie in there, because I think we've specifically addressed her topic. So tell me, what is your response? Do you see central bank digital currencies serving as a platform for smart contracts?
Most probably. Difficult to say. Most probably not, just as Adam was outlining. Yeah, okay. And of course, what we see right now, you can see there's a timing race going on. So most of the, I think it's 1/5 of the central banks, central banks that cover 1/5 of the population of the earth, they were saying that in the next 3 years they want to launch their CBDC, and another 20% or so they see this as a possibility too. But so we have about 3, and Madame Lagarde at the ECB, she said we will have the digital euro at the mid of the century. So you see, we have about 3 to 4 years to catch up on, and this is where the race has already started, and most probably this is where the problem also comes in terms of being able to disrupt. As Adam just outlined, we have lots of sell-side participants now that start to act in different ways. Either they are platforms, they're custodians, they provide trading capabilities, thought leadership, research, and of course they are helping the decentralized cryptocurrency space to flourish and be adopted more widely at this moment in time. So the CBDC space needs to catch up to be able to disrupt meaningfully, absolutely.
And now, sorry, across to you, Henry. I want to get back just to that idea of DeFi versus money. And which is it, and who's going to be the ultimate winner, or are these two things so interlinked that the question doesn't make sense?
Absolutely. Thank you, Eddie. And first of all, thanks to the Qatar Economic Forum for having us as well, and actually for bringing this topic on the agenda, which is a very important one. Absolutely, the topic of decentralized finance has become a really, really big topic, as you mentioned. I mean, just to put things in perspective, about 60 months ago, there was less than $1 billion in DeFi, and as we speak, there's over 50 billion of them, right? So when it comes to actually, there's a lot of disruption happening for decentralized finance, and the main one, because actually it's really, we're able to leverage the whole crypto space using the smart contracts that Adam was mentioning, but without any financial intermediaries. It means pretty much half of the participants in this panel would not even exist in a DeFi world if you look at it from that perspective. And it's happening. I mean, just last month, there was over $150 billion that was traded on DeFi platforms. Yes, that is a drop in the bucket if you compare to the $850 billion that were traded actually on fiat to crypto platforms, and $2.5 trillion that were traded on crypto to crypto platforms. But again, with the early stage, the biggest game changer when it comes to DeFi is not the fact that it's permissionless, the fact that it's open source, but what we call composability, what we call in the academic world financial Lego, that I can take 2-3 applications that I want, put them together, and come up with the application that I want. For example, right now, if I like an application from a Visa and Saxo, I have to get approval from Akshay and Adam to be able to use it. In DeFi, in 2 minutes, I can get these whatever I want, put them together, and come up with a solution for everybody to see. And that is a big game changer. And let's not forget, there's no financial intermediaries in their indirect relationship.
Well, that's what I want to ask you about. Who is it that's most likely to be disrupted? Who is most at risk here? What, not necessarily companies, but which sectors? Are we talking about exchanges? Because cryptocurrencies was going to be a way. In the early days, we were talking about payments between sovereign individuals. Instead, what we've seen is exchanges, where transactions are facilitated. So what I'm asking is, who is it that's going to be disrupted by this?
Sure. I mean, today, actually, Eddie, on that question, excellent question. We're seeing various applications on DeFi. One of them is exchanges, like I mentioned. Second, are stable coins. We have now over $100 billion in stable coin. Actually, we're having that in DeFi world happening. We have people offering crypto asset management in the DeFi world. And more than that, we're even having the insurance being offered in the DeFi world completely in a decentralized way. So a lot of these actually intermediaries are happening. So in a way, you can see these crypto exchanges are coming in and using an old school approach to actually facilitating the buying and selling and creating markets in crypto. And DeFi is coming and disintermediating all the intermediaries that now have been playing a role in the last couple of years in crypto. Are there centralized intermediaries going to disappear? Absolutely not. In the same way, even in 2021, people still love to call a trader to put in a trade. The role of centralized intermediaries will remain even in the crypto space for the foreseeable future as we get more and more adoption, but not only from retail investors, but also institutional investors as well.
Right. That's really interesting stuff there. Naveen, you tell me now, regulation, an opportunity or a threat for this space?
So to my mind, regulation is a huge enabler, right? So for all of us to put any serious money into cryptos, I mean, if it were to be mainstream, it has to be regulated, right? Because Absolutely. If things go wrong, there has to be a safety net. And that's the only way insurance companies will step in to say, hey, you know what, if there is regulation, something goes wrong, we'll come here and underwrite something, right? So to my mind, I don't see this as 0 and 1, but I see this as shades of gray, right? Where regulations will enable some of these innovations to happen because customers will demand it. So what cannot happen is for regulation to say, I'll not allow you to do it, even though the customers are saying, hey, you know what, we love it. So there will be this sort of friction, and the regulations have to accept that customers love it. It creates disintermediation for them, and it delivers them something that is not available today. And hence, the regulations will move to facilitate some of the things that we are seeing today, though they sit in an unregulated world today. So we see a world where both of these things come together because there is customer demand. Okay.
Then let me ask you, Chopra, if Akshay, my apologies. If we talk about regulation coming in, and we see mass adoption, that's all good and well. But one of the really key things, one of the interesting things for me, and I'm going to mention a competitor here, is one of your competitors, I think, was when PayPal suddenly allowed payments of, payment in Bitcoin via its channels. What is Visa doing on that front? What are the opportunities here for Visa?
Yeah, sure. So look, the way we look at it is primarily twofold, right? One is a large percentage of the global population wants in. They want to buy cryptocurrencies as assets or as stores of value, or to trade their fiat currency for crypto. So we want to firstly provide that on-ramp and that off-ramp. So if someone wants to go and buy Bitcoin or Ethereum, we want to be able to enable that transaction. Similarly, off-ramp. So if you want to use that Ethereum or Bitcoin or USD coin in a store, we want to be able to provide you the network to be able to use that Bitcoin as well. So one is that transaction, right? We want to be able to enable more and more people to get their hands on it. And the second thing is for the use of those new currencies as a method of transaction itself. And I think we're the only payment network which has done something like an actual settlement with a stable coin, which is USD coin. And we're actually working very much in that space. Eventually, this could even give us the ability to, settle into central bank digital currencies and such as well. So I think, we have to play both in the buy and sell side, but also in terms of just using it as a store of value. But look, I think one question which I don't see, or a comment that I don't see come up a lot when we talk about regulation, when we talk about a lot of this, is inclusion. Right. Currently, do we feel like it's an inclusive world for cryptocurrency? Do we feel like farmers and the unbanked and the people who need access to digital finance most are getting it through cryptocurrencies? So that's the question, right? And ultimately, I feel like we need to be able to provide a world where access is easy, the ability to buy into this space is easy, but also to be able to ability to buy out of this space, use that actual money in the real world and for everyone.
Akshay makes a good point there. I mean, the last thing I want to do in my daily life is think about my transactions. I don't think about payment. I think about the things that I have to pay for and the things that I want to pay for, but I don't want to think about the things that, the method of payment. Nick, I come back to you. We have talked a lot, in the past about, how disruptive this technology is potentially going to be. But that ease of use is critical, isn't it? And are we there yet with the payments on cryptocurrencies? Have we got past some of those early problems of the pace of transactions not being fast enough, and having to introduce intermediaries really via the crypto exchanges? What?
Yeah, thank you. It's a major user design and user experience challenge. I think the most difficult one still is probably address schemas. For those that don't know, when you're making a digital currency payment, you have to basically request it, and there are different ways of doing that. There's some progress that's been made there, and it needs to get easier. So the handshake between individuals or entities gets faster. But I do think that will happen, just like we changed the way website addresses work. We'll do a better job with crypto addresses too. And a big piece of that will be, how do you identify yourself on the internet, which is a whole other conversation that we could go spend probably a panel on. And I think there is one on digital identity. So in short, I'd like to summarize a few things that this conversation has brought forward. I mean, if you ask people what they see as a disruptive, feature of digital currency, crypto, or blockchains, you get a lot of different answers. You hear digital payments, better form of money, smart contracts, decentralized finance, 24/7, 365 trading. It is all of those things. It's so important for us to build a better financial system. And for a lot of us that are inheriting a world with institutions that design things that are 50, 60 years old, and observing a need for a more global transactional capability, that is what the entire industry has been tooling for the past decade. And we've certainly crossed the chasm from the very early years to a new era where institutional crossover investors are showing up. And it's not just a tiny conversation anymore. I mean, you've got the most powerful hedge funds and largest institutions allocating their first sort of salvo of assets into this industry. But Kyle Bass, Louis Bacon, Paul Tudor Jones, Ray Dalio, Goldman Sachs, Bailey Gifford wrote us a $100 million check this year. The money is basically positioning for the next era of development here. And I think if we just take a step back, in 2012, when I got started in this space, everyone was saying, well, nobody uses this. And then in 2013, it was like, oh, it's only for the nerds. And then in 2015, it was like, oh, it's only for online criminals. And then it's only for a few people in Silicon Valley. And then in 2019, it was only for online businesses. That's not real business anyway. And now you got a new criticism that it's only for small countries. What happened in El Salvador is incredibly important. A sovereign country in the world has decided to make digital currency, and specifically Bitcoin, a sovereign currency for themselves, a neutral reserve currency. And if a collection of more countries decides to continue to do this, we'll see much broader adoption, especially in vulnerable areas. Talking about inclusion, this is a big deal. There are people paying for coffee with Bitcoin in El Salvador. Now, not only that, but we're seeing MasterCard, Visa, and PayPal backwards, make backwards compatible integration into the legacy financial system. And all of this is happening quickly. So regardless of where your starting point is, I think, exploring cryptocurrencies, we really do need everyone to come in and bring their expertise to this. If you're a user design expert, a researcher, an academic, there is something for you to bring to the table. And it's not just for a few nerds anymore. This is a giant social experiment. It needs all of our efforts, because the current system we have is just further perpetuating wealth gaps, inequality gaps, and it's speeding up. And we can do a better job. So
I can't let anybody mention El Salvador without bringing in Stephanie on that point. How important is that move? I mean, is it El Salvador is allowing it as a means of payment, but they're not abandoning the local currency. So tell me a little bit about what this means, and are others likely to follow?
Allow me to comment on something that Nick said before coming to El Salvador, because he was, and by the way, don't get me wrong, I'm a huge cryptocurrency fan. Yeah, so just in case this, just because I'm bringing in some ideas on how could the space be disrupted doesn't mean I'm not as gung-ho about it. But Nick was talking about all these firms, and he mentioned a big sell-side firm as well, that is putting their money into the space. Actually, I just attended a webcast yesterday, and it is a firm that is now amongst the first ones to offer trading for us in the asset management space. So DWS is a leading German asset manager. We're managing 820 billion euros currently. And so I watched all this presentation about their capabilities, and at the end of it, they did a use case on, is Bitcoin important to be added in a multi-asset portfolio, and does it offer any benefits, diversification at a minimum, or any alpha added? And the result was you shouldn't add it to your portfolios. So this is what I walked out with, and I think that's an interesting ambivalence. At the one hand, you want to, maybe it's a strategy, you want to be part of being able to offer some of the services, trading, custody, research, thought leadership, etc. But you don't want to go as far as really recommending it to your institutional clients. And so I think there's some more work that needs to be done to get really everybody very excited about it. But coming back to El Salvador, I agree with Nick. This is a meaningful first step. It's been a little bit belittled in terms of that there's somebody acting that wants to also show some modern tilt, but it is it is something that could make school for others, absolutely, and it's an interesting move.
Okay. I'll make one quick comment on that, Stephanie, if it's okay. And I appreciate your perspective, and always welcome criticism and feedback. It's the only way we improve. It's interesting because a lot of institutions and high net worth individuals actually can't go to their asset managers to get allocations into digital currencies. And this is a big challenge. They're getting calls every day from their clients saying, how do I get a little bit of this? I'm afraid about inflation. I want hard digital assets. And until this year, there was nowhere for them to turn to, except for some of the cryptocurrency companies like blockchain.com or Coinbase or others, which have full stack crypto services, including institutional onboarding, trading, custody solutions, and more. But it took a while to tool it up. I do think you'll start to see regulated wrappers around digital currencies, and some asset managers will start allocating them. But they didn't have the regulated entities in place, but they will by the end of this year.
I can see Henry is dying to get in on the inflation side of it, but I just before I go there, I want to come back to Adam, because we've also talked about trading, and I think trading of cryptocurrencies for me is really interesting, and it is for an institutional investor. Having watched the space for the better part of 7-8 years now, we've seen a real evolution in the ways that people can get access to cryptocurrencies, and I want to ask how important that is, because number one, we've seen in the early days it was a completely decentralized system. Then we saw the birth of the crypto exchanges, and then in the previous cycle we saw futures exchanges and the like starting to come on board, and now there are so many different ways of trading cryptocurrencies. What is it that your clients prefer, and how do you see this develop?
Yeah, I mean, look, there's different people have different approach to their crypto exposures. Some people want to take their crypto exposures totally offline and put it in a cold wallet and have it stored so that they can make sure that no one has any access and can't find their passwords and so on and so forth. And that's great, but it's when you want to sell them, it's a bit of a pain in the neck to get them back online and get them into an exchange and get them sold. So, I think that there's also a benefit from people being able to use the more active cryptocurrency market to trade in general, whilst they keep a store of those ones that they want to have offline. Out of reach. So that's where we're seeing a lot of people using our platform trading. It is moving around a lot as well, which makes it kind of interesting to trade, and people like trading stuff that moves. So there's a lot of opportunities there, and I think we've obviously got a background in foreign exchange, and I think a large number of foreign exchange traders are getting into crypto trading or have got into crypto trading because FX has become so dull because every central bank in the world is doing exactly the same thing and printing as much money as they can and debasing their currencies at exactly the same pace that all currencies are losing value simultaneously, which is what the inflation is that we're getting at the moment. So for me, when I think about a central bank digital currency, a central bank euro, it's still a euro, and it's still going to be debased by huge growth of the ECB balance sheet, which is no different to a Fed digital dollar, which is going to be debased by huge growth in the Fed balance sheet. And if all the central banks are doing it, yes, relatively speaking, their currencies may not move around much, but relative to the price of all the goods in the world, their prices are all going to devalue, which is what we're getting with inflation.
Yeah, Henry, I mean, that idea of debasement and idea of inflation is one that has been with cryptocurrencies from the very early days. From the birth of Bitcoin, it was talked about as a hedge against central bank risk and central banks doing things with your currencies that you don't want to see done. But are cryptocurrencies really an inflation hedge today?
Absolutely. I think absolutely, as you mentioned, a lot of the reason we're seeing the retail interest in institutional investors is because this risk of currency devaluation, inflation, a lot of reasons that Adam just mentioned. And that's, I mean, as many of our listeners may know, there's only going to be 21 million Bitcoin ever. That's it. You could not print more. There's no quantitative easing in Bitcoin. Unlike CBDCs, which you can print because it's part of the M0 as much as you want. When it comes to Bitcoin, actually the supply is quite fixed. And there's various ways we calculate in the industry. We call it stock to flow ratios and so on and so forth we can compare it to gold and other commodities from that kind of hedge against inflation. One thing it's important to understand from that perspective is, as related even what Nick was mentioning with El Salvador, actually one of the reasons, one particularity with El Salvador is that actually El Salvador is one of the few countries that is dollarized. Literally, there's no local currency, and they use the US dollar as their home currency. And that was actually a hedge against potential inflation and currency devaluation. It was one of the reasons mentioned why they were adopting Bitcoin as legal tender. Whereas also that's something we're seeing a lot with institutional investors. We just released a survey 2-3 weeks ago that showed that 42% of hedge funds, traditional hedge funds surveyed that have over $180 billion of AUM surveyed by AMA, are either already invested in crypto or about to invest in crypto, and 21% have already invested in crypto. The 86% of those who have already invested are going to invest more this year. And one of the big reasons is a potential hedge against inflation. So definitely the narrative is here, not only in the retail world, but also in the institutional world as well.
Yeah, absolutely. I think, Stephanie, I'm going to bring you back in there because everybody is really interested by this idea of the central bank digital currency. And so tell me this one thing. What is it that a central bank digital currency does that I cannot presently do? Because as I said to you before, I haven't touched cash since before the first lockdown started. All of my payments are done probably with Visa or somebody else, right? I send my money to whoever I want to, and I don't think about it. So what is it that the central bank gets out of it and gives people?
There are a few things that the central bank gives to people, and something that was mentioned that Visa is interested in providing as well, which is financial inclusion. So that is one of the main drivers for central banks as well, to make sure you can reach everybody in the remotest part of your country, especially in times of crisis, if you wanted to provide some fiscal stimulus as well. So at that point, it becomes, it can also become a monetary policy tool, but it's also a helpful helicopter money distributor going forward. And on top of that, it gives a lot of benefits that the cryptocurrency world already is offering. So I think you will get more, because what is missing for for some that are looking at cryptocurrencies right now is the stability. And we talk about inflation hedge, and I totally get the picture. El Salvador, we have the same closer to our doorsteps here with Turkey. We have a huge debasement of the currency with the mismanaged central bank situation, and you see this fleeing into cryptocurrency space, and it's ultimately getting regulated because of that, by the way. So I get that point, but in terms of really treating it as a store of value, the amount of volatility is hindering. And when central bank digital currencies will come into the play, I would also think that it's one way of mass adoption as well, because it's almost a forced digital currency pocket for everybody out there, and people will get really used and accustomed to using digital currencies with all their additional benefits. And it just is that next level that will be presented. It doesn't mean that Bitcoin or other cryptocurrencies will go out of space, but they will get a narrower framework to operate in. And the wholesale market for sure has an ability to choose as to what kind of aspects they value more. And I mentioned that webcast I was attending yesterday. They were going through great lengths to explain the potential drawdowns you can have. They even went back into their statistics to compare to the tulip era, and were illustrating how vicious, the cryptocurrency space can behave. So it's definitely something that would scare some of the more traditional investors that we have in our portfolio.
Right.
Yeah.
When we talk about that wholesale market and the cross-border market, it would be completely remiss of me not to ask Naveen, how exactly that space is going to develop going forward, because I think this is exactly where Ripple wants to be positioned. Is that correct?
Yeah, absolutely. So for us, we are making cross-border payments simpler. They need to be cheaper. On an average, it costs 7% of the principal is taken away when a $200 transaction moves from point A to point B. And if we truly want internet to be successful, like we talked about, it to be the global force in terms of globalization, then it needs a money system which is at a fraction of this cost. And that's what we are building. And the way I think about it would be, we are building it with existing traditional financial institutions. So let's take an example. DBS, relatively conservative bank in Singapore, they are now operating a digital asset or a cryptocurrency exchange, selling Bitcoin, Ethereum, and XRP to its customers, right? So here's a traditional company which essentially uses its ability to do AML, KYC on Singaporean citizens, and then be able to provide them an off-ramp, right? On-ramp and off-ramp, right? And you look at it, I think some of the digital asset exchanges at some point will get banking license. So they will say, hey, you know what? I'm doing this business in my country, and I'm following all the AML and KYC procedures. I can just become a bank, and then I can move money from point A to point B. So to our minds, these two will come together, and hence we as Ripple, we work with regulated financial institutions because that will have the trust. They already have the last mile connectivity. They already have the AML, KYC systems that are must required if this was to go mainstream. So from our point of view, there is no 0 and 1. It's not one versus another, but at some point it'll all come together. And the question that you asked, the companies that are going to move faster are going to be the one who win, and those who don't will get wiped out. I mean, so essentially it's the same thing that happened in the internet world.
That's absolutely fascinating. It is anybody who sends money overseas knows exactly how frustrating an experience this can be, and anybody who can make this easier, in terms of payments, I think that's phenomenal. Tell me something though, Akshay. One statistic that blew my mind over the last couple of days was we had a government study from the UK's FCA saying that roughly 2.3 million British adults, 2.3 million, have ownership of Bitcoin or some other cryptocurrency. That's out of a population of about 66 million, right? So it's a small percentage, but it is a substantial percentage, and it is a bigger percentage than I expected. Are we all just playing catch up at the moment? Are we still talking about mass adoption when mass adoption is already taking place in front of our eyes?
Yeah, I'm not at all surprised by that statistic, actually. If I look at my region, Central Eastern Europe, Middle East and Africa, 5 of the 10 top markets globally by adoption are from this region, and anywhere between 8 to 15% official estimates of crypto adoption in some of these markets as well. So I don't think it's at all surprising, and I do think it's getting increasingly mainstream, and we've seen a really steep curve in terms of crypto ownership in the last 1 year. Now, here's the thing, whether we talk about crypto assets like Bitcoin or whether we talk about CBDCs or what have you, I firmly believe that we need a financial system, we need a currency system that is transparent, interoperable, and extremely secure. Right?
Okay.
The central bank digital currencies have some fantastic ability to do this, some of the other cryptos as well. Now, ultimately, that should be the goal for us. And I really like the way Naveen put it, because a lot of the rhetoric you see out there when it comes to crypto is very adversarial. It's very, we will show them, who's right, or we will prove this thesis wrong. It shouldn't be like that. We all inhabit the same world, the same financial system. Hopefully, for all of us, it all comes down to economic value added. That's the source of global growth, and we need to be able to make that movement of economic value added more efficient. So I actually fully agree with the way most of you are looking at it, because I think there's room for all of these players to be interoperable, to be driven by standards, trust, security, and things like that. And ultimately, that's, I think, the world we're heading to. It's not going to be a replacement. It's not only are those people, as Naveen mentioned, who are faster, but also those who recognize the value of interoperability, the value of bringing the entire system to its next level of evolution, as opposed to just having one niche in that system become more successful than the others. So I see it as a systemic evolution that all of us need to make. And yes, the statistics you mentioned are very much in line with that. It is becoming more and more mainstream.
Henry, one thing I want to know from you is we've talked a lot about where companies are going to be positioned for this. I also want to talk about countries and regions. And we're in Qatar, or Qatar is hosting us today. I'm curious, who do you think are the thought leaders on a national basis?
Sure, absolutely. I think there's a lot of, like any other new technology, there's some countries that made this a priority versus others, right? I would say that if I look at a global perspective, definitely Asia is the region to watch over the next couple of months. And three things that have been driving this. One of them is when it comes to central bank digital currency. We've talked today, when you looked at that wholesale CBDC, which is between a central bank and member banks, by far the most advanced activity right now is what's happening between Hong Kong, Thailand, People's Bank of China, and also in Singapore with a new project that they launched as well. That is by far one of the most advanced. When it comes to retail CBDC though, which is really central bank money that you can hold. Eddie, before you're asking, you don't use you can use your apps and you don't touch cash money anymore. The big difference is all of us, everybody listening to this session today, in our lifetime, we will have a third form of central bank money, kind of digital banknotes that we'll be able to hold, which is a big innovation. And real there, when you look at the topic, without any doubt, the activity is happening in China. To put things in perspective, the Bank of England launched its first consultation on this topic in March 2020. The PBOC has been looking at this since 2014. To put things in perspective, so far, there's been over $3.2 billion of digital central bank money that have been transacted. There's been over 35,000 use cases, millions of wallets being done. So China is easily 5 to 6 years ahead of the rest of the world. Now, when it comes to the Middle East, Qatar, for example, this really gives a very good idea of where the future of its money is going right now. If you're a country today, you're a regulator, a policymaker, you want to know what the future of money is, it's not in New York, it's not in Silicon Valley, it's not in London, it's definitely in Asia. You need to have an eye on.
The future of money is in Asia. Adam, would you agree with that?
I couldn't agree more. I think all that's happening in China with the central bank digital currency is built on top of the infrastructure that was built over the last 5 to 10 years by Alipay and WeChat Pay from Tencent and Alibaba, which is a fantastic infrastructure. It's coming across the rest of Asia as well. So we use it in Malaysia and Singapore with different affiliates and stuff. And that whole payment system it's just brilliant. It's so easy to use. It's ubiquitous amongst all the merchants, and it's digital money. It's basically there. So I do think that Asia is a long way ahead of parts of Europe, where Europe really hasn't got that concept of digital money in a lot of countries. They do in Denmark. When I go to Denmark, which is obviously where Saxo is based, they're fantastic. They're really, really good. And I never, ever get Danish kroner when I go there cash. Everything I pay for with my iPhone. But it seems that other parts of Europe are not at that same level yet.
This has been such an interesting discussion. And honestly, I cannot believe that we've gone through our 45 minutes that quickly. I could talk probably to each of you for another 45 minutes. Thank you for our guests for joining us. Henry, Nick, Navin, Adam, Akshay, and Stephanie, thank you very much for being with us today. And I'd also like to say thank you to the viewers and the listeners from across the world who's been with us today to just hear these big topics. And I'm sure that our guests will be happy to hear from you if you would like to look them up and reach out to them. But most of all, thank you for Qatar for setting this all of us up and bringing us all together. I look forward to hearing from everybody.
Thanks very much. Much appreciated. Cheers.
Bye.
Bye.